Hello, all. If there is one thing that brings people together, no matter which part of the globe we are all in, which makes people cheerful and happier, and that thing is nothing but sports. And especially during this COVID 19 related lockdown, that's something we all miss a lot. We miss sports like anything. It's so close to everyone's heart, and we follow our favorite teams. And sports is a part of our day to day life. And today, my investment thesis is predicated on this sports arena. And that's a trend that I've been noticing that's fast catching up, especially more accentuated in the last 1 year. And that's nothing but sports betting in United States. With the legalization of sports betting and left to the state's discretion, whether to legalize or not, almost 30-40% of states are already legalized it. And in the process of legalizing, in the next couple of years, especially in the next 1 decade, we can see that the betting is going to become more prominent. And especially with 5G and the digital platforms that are available, people can do sports betting on the digital platforms on of many companies, and also they can play iGames, so-called iGames and digital games on the mobile. So if there is one theme I'm really excited about that is going to play out in the next 1 decade, that's sports betting and the whole digital gaming arena. And I have done an analysis, and just to show how prominent this is and how big this can become, because we have precedents of sports betting, how it became and how wealth was created as an investment theme in Europe. And with that as a thesis, and I'm going to explain, let's get into the analysis and see how this is going to play out. So here is a presentation about this theme. And before we even get into the further details, here is a small disclaimer that whatever companies or stocks that discussed in this presentation are just for analysis purposes only, and none of these are recommendations by any means. So please consult your own financial advisors before you make any decisions around investing. I mean, this is more of a case study analysis on a big theme that's coming up. So this is the digital sports betting in US. That's the next big theme. And I'm going to show the analysis on how this theme can play out. Here are with some case studies. So on May 14, 2018, exactly 2 years back, the United States Supreme Court declared the Draconian Professional and Amateur Sports Protection Act, PASPA so called, the federal law prohibiting the states from authorizing sports betting, to be unconstitutional, which means it was no longer relevant about that law which prohibited sports betting. So they left it to the discretion of the individual states to decide if they want to authorize and regulate sports betting in their states. Around 18 to 20 states have either authorized or in the process of legalizing sports betting. And any US state that wishes can now offer legalized sports betting. So this is how it happens. You can see a picture, and that's a big platform, which is the real time betting that's happened on the with the screens and things. But trust me, this is changing, and this whole physical betting is moving into mobile based, digital based. And that's why I'm so bullish now, because digital would really enable people to do this betting and playing i games and the national and the sports games even more with ease. So there is NBA, NFL, MLB, NHL, all four major sports arenas in US are going to be available for this legalized sports betting on digital platforms. Now, watch out for the sports betting incumbent leaders, because this is a trend that has already played out in Europe big time. I mean, over maybe more than a decade even. We have seen that, and there is a precedence, how legal betting in Europe became so big, especially in soccer and football leagues, with UK gambling companies becoming so big in sports betting. And it appeared to be attractive investment thesis if we had played out earlier. Now, UK, the incumbent leaders, in many based out of United Kingdom, have come to do some sort of partnerships, which are pretty attractive deals, and also done some, partial stake holding in US based betting companies, because they wanted to be early in the game and they are trying to be ahead of the curve. And few examples are, the GVC Holdings PLC, which is a British sports betting company. that is listed on the London Stock Exchange and part of FTSE 250. They recently struck a partnership with casino powerhouse MGM. We all know MGM in US to launch the betting online for just NFL, National Football League, and Flutter Entertainment PLC is again another bookmaking holding company created by merger of Paddy Power and Betfair acquired Fanduel. Fanduel is again based out of US, New Jersey, and Fanduel has around 50% market share in New Jersey City alone. And it's a Flutter, which is the combined entity that's been formed, is poised to launch online. Betting in Pennsylvania next, and so those are the two companies we can see they are striking partnership with United States firms. William Hill is another sports betting giant in Europe that's partnered recently with a US betting company called El Dorado, and I believe El Dorado is listed as well in US to leverage on the betting legalization revenue from United States. So the incumbent players of Europe has already made the move. They've already ahead of the curve, partnering with many of the firms, and I think United States, many of the firms are ready to partner with the European firms primarily because of their experience and ready to available platforms that can be just reused in the sports betting arena in US. And we can see here, like, many of these firms are already listed in Europe in FTSE. So we can see GVC Holdings, how they have performed. Right now, it has fallen a lot. We can see in the graph, it hit the high of 14.86 in, say, August 2018, 1 year back, and the market has been down after that. Flutter Entertainment ADR, it's an ADR as well, which is a combined entity with Fanduel, and this has been pretty much flat in the last 5 years. It hasn't done much because it's a mature industry in Europe. That's something we have to consider. And even William Hill PLADR, they are listed, and they are at rock bottom levels right now in terms of their valuations. So it hit the high of 28, and I think it has fallen all the way from there to 6. Now currently it's trading at $6. So William Hill is another one, another sports betting company in Europe. So we can see the incumbent leaders already partnering and taking advantage. Now, but what I really like is we really need to focus on companies which are in US based, and these are emerging giants because these are small firms compared to the European counterparts. So there are two companies I'm going to do a case study on and how they are so well placed to ride the uptrend of the sports betting in US, in my opinion. So the first company is in topic is pretty much in highlight in last few days, last few weeks. That's Draftkings. And Draftkings has been in highlight due to one reason, because recently, just 1 month back, 2 months back, they did a IPO, not an IPO, they did a SPAC, which is the special purpose acquisition vehicle. Due to, I mean, by doing, they came public by doing a reverse merger of SB Tech, their holding company, and they did a SPAC through that route instead of an IPO. They became public in April 2020. Now, DraftKings daily fantasy sports product is available in 8 countries with 15 distinct sports categories, and they're officially, the daily fantasy partner of NFL, as well as an authorized gaming operator of MLB and NBA. So they are well spanning across other areas of all type of sports like basketball, baseball, everything. Now, with a market cap of $19 billion, and so the interesting part is when they started, became public, when they started trading, it was even half of this valuation, just at 10, $11 billion. And right now it's trading around $19 billion. It had a big run up run, and its results were pretty good recently, and the revenue was around $113 million. It was growing by 30% in the quarter ending March FY20. Now, the interesting aspect here is there was a complete lockdown for almost 1 month during this period, and they just came public. And so we need to consider, keep that on those things in mind. But revenue was growing around 30 percentage, and the interesting aspect is they are not only sticking to only US based sports. They are partnered with even Korean baseball organization, I think, and they've been partnered for table tennis, multiple other sports, and digital games as well. So this is not a out and out pure play sports betting. They have many digital games on their streaming platform, and they do streaming, live streaming of platforms as well, live streaming of games as well. So they recently acquired the rights to live stream all Germany's the leading soccer Bundesliga matches and Korean baseball organization on Draftkings. This has been pretty successful. The Korean baseball has been a hit, especially during this lockdown. People are looking at alternative betting arenas in with other areas of the globe which are already opened up, who are doing sports betting or sports streaming. Now, their CEO, Jason Robbins, indicated that they saw record betting volume on the NFL draft, and also now seeing in Netflix series Tiger King. Now, this is another interesting thing, how they are stitching it together, integrating on the Netflix streaming series as well. Tiger King has been a rage, we all know, and they were offering cash prizes for correctly guessing viewers' favorite characters and codes. So they are coming up very, very interesting way of bringing these betting themes and guessing games, partnering with Netflix, which is a big one. And they also launched a series of pop culture free to play pools contest that covered topics from democratic debates to TV shows like Survivor, Last Dance, and Top Chef. So they are coming up with very innovative way of partnering with different TV series, streaming services, global sports games like Korean baseball, table tennis, and all of that. And that's how they have made it big in the last couple of months, especially when the sports are really shut down in United States. Now they are well capitalized. They have around $500 million in the balance sheet. In the Q1 2020, DraftKings launched retail and online sports betting in Iowa, Colorado, went live with iGaming in Pennsylvania. Now, so we can see that they are proliferating across other states, across other geographies, across other streaming services like Netflix. So this is just the beginning, $130 million. The problem here is most of the people don't know how to value this firm because just started, the legalization has just started. It's a new age firm. They just did a public reverse merger and SPAC. So people really cannot estimate the earnings potential and the cash flows. One thing I can ensure is with $500 million they will be able to survive through the next 6 to 8 months till the lockdown is lifted, and the revenue is going to be exponentially growing. This is particular scenario of exponential growth because there could be more states added, there could be more games coming onto the platform, there could be more series coming on the platform, but the platform is going to exist, and we really don't know how exponential this can become. It could be 10 times growth in the next 10 years, it could be 50 times growth in the next 10 years. One needs to wait and watch, but we cannot really extrapolate and say that this is $113 million revenue and trading at say 20, I mean even 50 times earnings. It's not the way to look at it, this particular platform, but their platform is strong. Again, this is not an investment suggestion, but this platform, this business case could be well prominent the next 10 years down the line. So the next business, another business case study is Penn National Gaming. Again, a prospective gainer from sports betting arena and legalization. Currently, it's an operator of casinos and racetracks. It's a physical casino with, to some extent, they have some digital presence. They have physical casinos around 41 facilities in United States. They're entering into sports betting through their 36% stake in Barstool. So Barstool is another firm which is which is a full-fledged digital gaming zone and platform, and they are big time into digital based sports betting. And the 36% stake in Barstool, they I think acquired by paying $135 million and $28 million in shares and $135 million in cash. So put together, it's around $150+ million. And they took a preferred stock mode as well. So they have an agreement. They have an agreement that after 3 years, Penn National will increase its stake ownership to 50%. So which is good thing. So they are increasing their stake in the sports betting counterpart, which is Barstool. And Barstool has very, very strong management and has been very successful company. So it's a brilliant acquisition or brilliant stake, I would say, that Penn National took. And their vision is very clear. They want to get into the digital gaming and sports betting. According to Jay Snowden, the current CEO, Their focus is completely on making omni-channel digital gaming and sports betting big, and that's their future strategy. And the acquisition in Barstool, the stake is clearly in that direction. Okay, now here is the interesting part. This is currently it's a public company. It's been existing for a while, and it's around valued around $3.9 billion. Now there is an interesting aspect here. This firm fell down like anything, along with the other casinos in this lockdown due to the whole casino stocks got uh, they fell like almost 60-70%, including the MGMs of the world. Now this is another company that was a collateral out of the whole incident, and it fell down almost to $2 billion. Just 1 month, 2 months back, they were trading at $2 billion market capitalization. It's currently valued at $3.9 billion, so it's almost a doubler from that point in the last 2 months. And they reported Q1 FY20 revenue of $1.12 billion. We need to take into consideration a 1 month lockdown or half a month lockdown in that quarter. Now, in the first 3 months, they did that, and it's the one can extrapolate. It's roughly $4 billion annual revenue run rate they have. With lockdown lifted, they can increase even further. Now they were valued roughly half the sales just 1 month back. Now they are trading at almost on par with sales. So the interesting part is they have an annual revenue now going to be $5 billion in the next 1 year with their growth in focus. Gross margin of 45%, pretty interesting. Now with more and more digital platforms, gaining revenue share of their overall revenues and sales, their margins going to increase further, because we all know digital is going to bring down their physical investment and capex required, and the whole cash requirements. So cash in hand is still pretty good. They have $750 million, so that they can sustain for the near term future. We can see even if the lockdown is extended, they have strong liquidity the near term. So that's something not to be worried about. Now the valuation looks very attractive. It's trading less than the projected sales for next year. And with Barstool's acquisition going up to 50%, their revenue can go multifold. Again, you can see how their stock has traded in the last 5 years. Pretty much, they have gone up a lot from the last 5 years, but right now their trading is at around $29, which is like, their highest was 37 per share. Now it's around 29 per share. We can see that there is still, they have not touched their 52-week high. But the point here is, there are emerging companies in the range of 3 billion, 5 billion, $10 billion, even up to Draftkings at currently $19 billion. These are emerging firms which could go and become big in the next 1 decade, especially with sports betting legalization and digital iGaming. That could be really a game changer for these few early entrants. And I've just brought in two businesses that I found interesting. There could be many other like Eldorado, and 5G and digital mobile based operations can really galvanize this industry growth in the next coming decade. So if you like this business analysis, you can also visit sandcompounding.com, where I have a lot of discussions on different businesses. I've done analysis, video report, and articles, which are all for consumption for common investors. Do visit there, and also subscribe to the channel for more such videos. Thanks for staying with me.